You know the saying, money doesn't grow on trees. Man, if money grew on trees.
Oh, yeah.
That'd be
Well,
awesome.
our next guest wants to help you get to a point in your life where you don't need a money tree because you've made all the right moves to ensure a secure financial future.
A point where you can just sit back and enjoy the fruits of your labor during your golden years. We would like to welcome back to the Delmarva Life Couches. This is Michael Andersen. He's the founder and president of Andersen Wealth Management in Eastern Salisbury. Thank you so much for joining us.
Glad to be here. Thanks for having me.
Okay, so your goal is to help people make sure that their money lasts.
You got it.
That's really possible.
You got it. Exactly right. So when folks go into retirement, we of course don't know how long we're going to be retired, hopefully a long time, but we do know how much money we start with. And the goal is to try to manage it so the money lasts as long as you do.
Oh, okay, so an important part of this is increasing income during retirement, so I understand, but isn't that the goal of retirement, not to work? So how would a retiree increase their income?
Well, there's all sorts of financial products out there. There's banking products, insurance products, investment products, and it's all about having the right products for what you're trying to achieve. And like you just said, increasing income is very important. After all, if you have a couple retiring in their mid-60s, chances are at least one of them will still be alive 30 years from now. That means we probably definitely and certainly want to have more income over time to help offset inflation.
So is it a safe guess that understanding taxes is pretty important when it comes to your retirement as well?
No, of course, especially in this country when the tax code is this thick. You
my.
definitely want to take advantage of it because there may be some opportunities to pay less, and we all, of course, want to pay less in taxes.
Yeah, and of course, market fluctuations. We might be seeing some of that.
We very well may, yeah.
That plays a role as well?
Sure. Well, you know, financial markets go up and down all the time. In fact, just this afternoon, they've been up and down a whole bunch of times. And over the course of a typical person's retirement, you're going to see probably a market correction, at least based on history, maybe every 4 or 5 years. So we know it's pretty likely to happen, and with that knowledge, we can be prepared for it.
Now, you just said that hopefully retiring, somebody's going to live another 30 years or so in retirement.
Hope so, yeah.
Is it a wise idea to leave some of your assets for your spouse?
If you want to stay married, you should.
That's probably a good idea.
Yeah.
Okay.
It is, but in some cases, it's actually not a great idea. So when you leave your money to your spouse, if it's a retirement account, and they don't actually need that money, maybe they're living on Social Security and their pension, well, they're forced to take distributions, but they're based on the spouse's age, which is typically more of a distribution, more of a taxable distribution than if you left it to your kids or grandkids. So it may not always be the right idea to leave your money to your spouse when you pass away.
I didn't know that.
I think it's safe to say that some people who are watching right now are probably hearing us talk about this, and they're confused. It's a very complicated system, but you want to take care of that with an event coming up?
Certainly we do. So I'm a big believer in financial education, and we're doing an event at Salisbury University. It's our program at their location called 6 Common Financial Mistakes and How to Address Them. It's coming up in the next few weeks, and we're going to help folks solve some of these common mistakes that they might make to help them hold on to their money.
All right, specifically it's going to be the 19th and 20th at Salisbury University. It's not part of the school. It's at the school.
Correct.
But it's not part of the school. 6715 1101 Camden Avenue. Okay, so who would you consider the perfect attendee for this event?
This event really is for someone who's maybe in what we call the red zone, which is about 10 years before retirement or about 5 years into it. So if your typical person retires at, say, 65, I'd say anyone between 55 to 70, this program is ideal for.
And it's extremely important, isn't it?
Oh, it's incredible. You know, when we make financial decisions, we oftentimes make mistakes because we don't have all the information we need. So this program and some of the others that are taught, it gives folks the knowledge they need to hopefully make the best decisions for themselves.
And I am glad we got somebody as smart as you taking care of this.
I don't know about
Teaching
that.
somebody like
Glad to be here.
Thank you so much.
Thank you.
Appreciate that.
Thank you. And if you want to read more about Andersen Wealth Management or for more information on how to sign up for the course 6 Common Financial Mistakes and how to avoid them, go to delmarvalife.com.